Good morning, everyone. Welcome to Windsor Brokers live daily market outlook, Monday, 19th of November 2012, beginning of the new week. The generally positive sentiment established during the last week and the fresh risk appetite that pushed single currency up to 128, our initial and strong barrier, with the more significant gains of US dollar against Japanese yen that hit fresh high this during the overnight session at 81.58. See some more potential towards the upside along with the sterling that is still holding above 129 on the corrective action and hitting a fresh high on the recovery attempt from 158.26 low at 159.22, where the gains were limited by Fibonacci barrier at set 159.22. Overall positive tone established is seen on the softer dollar due to the negotiations that start between the Democrats and the Republicans basically to resolve the threatening U.S. fiscal cliff. And this is one of the most important highlights of the current situations in the market, as the negotiations yielded some hopeful commentaries with the Treasury Secretary Geithner venturing to suggest that while still a few weeks away, a deal will be done. This is actually one of the burning problems for America, and any failure to solve the current fiscal situation could trigger some more significant bad situation, let's say, in the simple words. Also the current crisis in the Middle East and the increased tensions between Israel and the Palestinians have affected, of course, the oil price. That January US crude oil hits levels close to 88, improving from the recent lows of 84.00, while still I would say in the larger picture the oil is still within the range established previously at between 84 on the downside and the upper extreme point at 89.20, and a break above this would be signal of fresh reversal of the oil price. As said, the intensifying tension in the Middle East is seen as a good support for the crude oil. From the other side, EIA announced that the supply of the oil for the whole world, the market, is adequate, and there is no any shortage in the supply. So basically, currently the oil is only driven by politicals, I would say, at this point. Also, the yellow metal shows some signals of recovery after dipping as low as approximately 17.04. In last week's comments, I mentioned that failure to clear 1740 zone as a quite a strong barrier could see the reversal down to 1702. This was our initial support. 1702 is the low of previous of 7th of November, and 1700 as round figure support. And basically that scenario already happened. Currently the yellow metal is improving, and improving the near-term structure sees again more potential towards the downside in averting immediate downside risk of a break below 1700. As said, the most important also is tomorrow's meeting of Eurogroup of finance ministers, finance ministers of Euro area, that will look to find a temporary agreement for Greece, and most likely Euro leaders should agree on 2-year loan extension for Greece. An agreement among Greece creditors on how to reduce its large debt pile should be rooted in reality and not in wishful thinking. It was the comment of head of International Monetary Fund, Christine Lagarde, who said, as she heads into a tense meeting with the European leaders that starts tomorrow, as this remains in the main focus. At this point, we should be focusing on euro. Upside, we're going to come to this in our technical part. Upside, quite strong barrier at 128.00 is looming now. In case of any failure, like happened on last Friday, of course, on the first attempt, we shouldn't expect a clear break, but failure to clear this level would again intensify downside the pressure. As overall picture for euro is still quite negative, while break above 128 would be good signal for a stronger recovery. A similar situation with the sterling. Lift above 159 did not deliver enough strength so far, but overall positive tone sees potential. We need to see the break above, I would say, 159.50 or 160 to improve the current structure and the avert immediate downside risk on its on the pairs down move from 163.08 that dipped so far to 158.26, basically to prevent a slide below 158, where is the also just below this is the main bull trend line support that will be signaling, and also the 50% retracement of the entire rally from 152.67 to 163.08 that will increase the downside risk break below 158. As today's calendar is poor and almost we have nothing, I suggest we turn our focus towards the technical part, as we are slightly delayed this morning, and I don't want to waste more time in talking. Starting with the euro dollar, as we usually do, I'm going to wait so you can see the screen. Hourly structure is still positive following bounce of 126.60, 13th of November low, with the last Thursday rally testing 128 and then subsequent strong sell-off as expected, basically on hitting such a strong barrier as 128.00, dipping as low as 126.89, denting briefly the 127 support, as this was a short-lived. The subsequent bounce is back to 127.70 zone. The positive tone dominates still on the hourly chart. It still sees more potential towards the upside, while improved 4-hour conditions, and the price currently attempting above 55 days exponential moving average, while 20 days one is underpinning the advance, sees again more potential for test of 128.00 as basically the main bear trend line and the channel resistance has been dented on a break above, and the break above 128 as our key point. That marks the previous low of 1st of October, 200 days moving average, as well as a neckline of double top at 131.70 and 131.38. Break above here is required to improve the current structure. As we can see, the daily studies are still in the negative territory and still keep downside pressure alive as long as 200 days moving average holds. From the downside, the price is well supported by ascending 90 days moving average, and the break above 128 is to open. And next barriers 128.25 is the low of 11th of October 2012, and then we have 128.80, another strong barrier. These are the lows of end of October, and 129.00 is pardon, round figure resistance, break of which is to definitely confirm the higher low at confirm the bottom at 126.60, and the shift again focused towards the upside levels, with 130 seen as a strong and psychological barrier. From from the Ichimoku studies, 128.80 zone is reinforced by daily Ichimoku cloud top, and basically a break above 128 is to look for another very strong barrier, 128.80, 129. If we remember from last week's comments, where when the pair was still within this area, this was acting as a good resistance. Near-term structure, as said, maintains positive tone, and basically only loss of 127 as a round figure, and the more significant last Friday's low at 126.89 would soften the near-term structure and definitely turn the focus down towards 126.60. As said, the tone on the larger picture is still quite bearish, and as indicators hold in the negative territory, still sees risk of further extension higher, further extension lower in case of failure to clear 128.00. So basically our main focus is at 128, 128.20 zone on the upside, and on the downside we should watch 127, 126.89 break of which would be bearish, while break of 128 would lend additional support to the pair and open way for a stronger recovery of the down leg from 131.38 to 126.60. The British pound is in near-term corrective mode following hitting fresh high at 159.22 this morning. This marks approximately 38.2%. I do apologize. 38. We are at the wrong chart. I do apologize. This is the Fibonacci resistance of 160. Pardon, 50% retracement of 160.18 down to 158.26. This is the low of 15th of November 2012. On overbought hourly studies, the corrective action so far being contained approximately at 159 zone. This was our initial support, ascending 20 days exponential moving average at this zone so far held the downside protected us. Overall, the picture is still positive in the near term and sees more potential towards the upside. A break, clear break above 159.22 and more significant 159.45 that marks 61.8% retracement of the 160.18 to 158.26 down move is basically required to avert immediate downside risk and turn the focus from the lower supports at 158 zone and then shift focus up towards upper barriers. Also strong resistance lies at approximately 159.50-60 levels. These are the lows floor of the higher platform from beginning of November. And then we have 160.00, pardon, psychological and round figure resistance. Also a 50% retracement of the larger 161.74 to 158.26 down move. Fresh momentum emerging on the 4-hour chart studies sees now more potential towards the upside as the price basically dented the 55 days moving average, currently at 159.14 and still holding above 159 for potential fresh corrective action and fresh recovery of the larger down move from 163.08 to 158.26 so far. Basically the 200 days moving average currently at 158.33 so far contained the dips, and holding above these levels sees more, I would say, potential at this point for some stronger recovery. Conversely, violation of 158.30.20 and the 158 support risks further retracement of larger 152.67 to 163.08 rally, with the trendline support standing just below 158, below 158 as a round figure support, reinforced by 50% retracement of 152.67 to 163.08. So larger picture, as said, is still maintaining a negative structure. I would say break above 160, that also marks the main bear trend line of 163.08, would improve the larger picture, while near-term structure is in the positive mode and sees more potential for a stronger recovery. 159.45 50 zone is seen as the next upside barrier ahead of round figure and psychological 160.00 level. Dollar yen remains a top performer of past couple of days as fresh extension higher this morning hit 181.58. This is the fresh high, marginally higher than the previous 81.45. Near-term structure is positive, however. Current reversal could trigger some stronger dips that are signaled on the hourly RSI and the MACD bearish divergence. As we can see it here, it's quite clear. Both indicators are in descending mode despite the market gaining speed. So some corrective action could be seen on this signal. Also on the 4-hour chart, we have the overbought conditions. That RSI is already emerging out of overbought conditions. All this could be a trigger for some more significant corrective action. 181.00 is around figure support, also 23.6 retracement, and 80.89 low of last Friday are seen as a good initial and good support. This is also reinforced approximately this zone 81.00, 80.80 by 20 days exponential moving average that is still in ascending mode and offering good support. I would say ideally reversal should occur somewhere around 80.80 in case of violation of 81.00 to keep the immediate bulls in play for possible further extension higher. And then we are looking for 82.00 as around figure resistance, and then mid-May highs at approximately 82.20. These are the 15th and the 20th of May highs that are seen as the next upside targets, as basically the pair dented the last Fibonacci barrier at 81.48, 61.8% retracement of the down move from 84.17 yearly peak to 77.12, 9th of September 2012 low. Dynamic support above the current market price lies at 82.32, is a part of 82.00, 82.30 barrier. It's descending 150 days moving average on the weekly chart. Back to the near-term studies, as said, negative. The hourly indicators are turning into the negative tone, and this could be a signal of some more significant correction. 81.00 offers initial support. Then we have 80.80 and 80.67 Fibonacci 38.2% equivalent to the previous high, and basically a violation of this level break below here could more significantly weaken the near-term structure and put immediate bulls on hold in favor of some stronger corrective action. 50% retracement at 80.39 seen on a break, 55 days exponential moving average at 80.32, and 80.11, 61.8% retracement, and 80.00 of course as round figure psychological support seen on the potential break below 80.67. So far still positive tone sees bulls favored despite overbought conditions, with collective action seen down towards 80, 80, 70 as ideal reversal point to keep bulls firmly in play. And finally, dollar Swiss from the currencies, upside rejection at 95 and subsequent dip down to 94.01, our strong support, and the 200 days moving average where dips were contained so far, still keeps the overall positive tone in play. As we can see on the daily chart, the studies are still pointing higher as price action manages to bounce off important 94 support. However, from the lower time frames, 4-hour structure is now turning negative following a recovery attempt that stalled at 94.89, and now fresh weakness. So far, each 94.34 is still seeing the downside vulnerable at this point. The violation of 94, of course, could be quite dangerous for the pair. This is also close to 50% retracement of the latest upleg from 92.75 to 95.11, and basically break below 94. That also marks 200 days moving average would be quite risky, as that cross occurred on the crossover of 55 days over 200 days moving average, is still seeing a downside vulnerable. Break above last Friday's peak at 94.89 conversely will shift focus again higher. As I said, overall positive tone still keeps more focused towards the upside, and we'll be looking for test of 95, 95.11 recent peaks. That will open way for a further corrective action, extension of the corrective action from a recent low at 92.13 posted on 17th of October 2012. And basically this is also marking a 38.2% retracement of the larger 99.70 to 92.13 descent, reinforced by descending 90 days moving average. Basically break above 95 zone as a very strong barrier would be a good signal for a stronger recovery of dollar Swiss. And we're going to move now to the commodities. You can prepare your questions as from now. Once we finish the presentation, you can submit questions and we can proceed. If you have any other instruments that you'll be looking for or any other question, you can prepare them as from now. As said, the bullish tone established on the 1 and 4 hour chart is still in play, as shown on the ADX studies. But if we take a look at 4 hour chart, we still see the oil price in the range, trading despite improvement, of course, of the technicals as the pair clears, as the price basically clears initial and the lower range, top at 87.20 zone, hitting so far levels close to 88.00, 87.93 seen so far. This is so far seen as quite supportive with the 88.76, 50% retracement of 93.47 down to 84.05 seen as the next. This is Fibonacci level, and 89.00, 89.19 low high of 6th of November 2012 seen basically as a break point for some stronger recovery. For now, the range is still in play, and as long as 89.20 holds, the upside, I would say more sideways movements would be seen. But of course, technicals are slightly skewed towards the upside. Already overbought, overextended the hourlies. Now see potential for some corrective action. Immediate supports approximately 87.20 and 87.00. Penetration of 87 could again shift the focus towards the downside and keep basically the range in play. On the larger picture, as we said, the break above the diamond shape that was, we mentioned it in one of last week's presentations, sees a good potential for a stronger recovery, especially in light that the price also breaks above tentative bear trend line of 100.72 through 93.47, giving good signals for some stronger corrective action at this point, as the daily momentum is now back in play and sees more potential for a stronger recovery. As said, break above 89.20 as our break point and reference level is seen as a trigger, would be seen as a trigger for some stronger recovery, and basically would delay the overall bearish tone that has been established on a reversal from 100.72 and left with the lower top left at 93.47. Some improvement will be seen, of course, on the break above 89.20. And finally, yellow metal. Good recovery seen on current bounce of from 17.04, 17.05 low of last Thursday. Still keeping probably hopes of possible extension through 17.34 and more important 17.38, where we have also the Fibonacci expansion at 61.8% at 17.40, and then Fibonacci 61.8% and 17.48, our initial upside targets. As long as 1700 stays intact, we have 17.02 low of 7th of November, and the last Thursday and Friday lows at approximately 17.05. Holding above this zone will keep immediate bullish structure of 1670 low in play. These levels are also reinforced by approximately 50% retracement of the rally from 1672 to 1738 approximately, and holding above these levels, as said, will keep potential for a further recovery. Also weak dollar works in favor of yellow metals price. On the upside, we have quite a good barrier at 1734. This was previous high and also Fibonacci resistance, and then our key barriers at 1738 and 1740, break of which is to confirm the higher low at 1704, and basically open way for extension towards upside the targets. 1748 is the 50% retracement, and pardon, the 61. What did you say? 61.8% retracement, and also 1763 approximately we have the Fibonacci 100% expansion of the 1672 to 1731 ascent. That was all from me. If you have any questions, please you can submit them now. Many thanks to you. I'm glad if we cover all the important points and we don't need to add anything else. So it seems that we have no questions at the first day of the week. Then I wish you good luck in your trading. Keep an eye on the levels that we mentioned, especially on euro at 1.28. I believe that most of you are in euro. I'm also in euro, and watching these levels carefully. We'll see in case of break higher, especially in light of tomorrow's Eurogroup meeting. If the temporary solution will be found for Greece, that is quite likely. Then we'll have the single currency a bit more supported, and looking for a clear break above 128 that will open a fresh phase, bull phase for the single currency against the US dollar. Since we have no questions, I would like to thank you all for coming. Expect to see you all on tomorrow's session at same time, 8:00 GMT. Until then, of course, wish you a nice day and good luck in your trading.